What's up, clan? IslandTraderFX here, and of course, we're back with another one. I hope you guys had a fantastic trading week. Um, the week was definitely good, both for the prop and the personal. However, I will be showing some examples of the trades that I took on the personal. But what we'll really be looking at this time around is risk to reward, right? What I'm going to essentially show you guys is the pros of risk to rewards. Well, not necessarily the pros and cons, because in all honesty, there is no cons where proper risk to reward is concerned, but the pros of risk to reward. You could have a low winning probability. However, risk to reward would cause you to be profitable. And I'm going to go ahead and show you guys an example of how that can be done. All right, so we're going to go ahead and jump over to the chats now. Ciao. Okay, so now that we're on the chats, let's just dive straight into what we were speaking about, which is how your risk to reward could actually save you. Earlier on, we kind of spoke about win ratio or win rate. So we could see that my win rate thus far is 45%, right? Which is below normal. Of course, the win rate would have gone down compared to when we first started the challenge. I think we were at like 75% win rate. But at the end of the day, even with a lower win rate or win ratio, your risk to reward will still save you. And that is the importance of risk to reward. So we could scroll down and look at how I performed for the month of May. So for the month of May, I took 5 trades total. We could see the 14th and the 19th. Those were 2 losses. Okay, those 2 losses, if you add them up together, it would be just above 1% overall in loss. Right now, where I am in the challenge, I'm about 3% in drawdown, if my memory serves me right. So opposed to risking 1% per trade, when I'm up and not in drawdown, I'm risking 0.5%. I'm cutting my risk in half. And we could see that literally one trade, let's look at the 23rd right here, one trade, just the 23rd would have covered the 2 losses. So imagine 2 trading days, 2 L's, and 1 positive trade covers the 2 losses. This is the power of risk to reward. Okay, you always want to ensure that whatever you're risking, you're getting 2 times the amount, or you're getting 2.5 times the amount, or you're getting 3 times the amount of whatever it is that you're risking. So this is the benefit of risk to reward. Literally 1 trade covering 2 losses, right? And then for the rest of the month, I am up 2% and change. Okay, so that's the power of risk to reward. So for the month of May, just sorry. So for the month of May, literally having a positive risk to reward is essentially saving me. Of course, the month of May isn't done as yet. We still have 1 more week. I want to look at how I perform for that week. I haven't even done my top-down analysis on all of my pairs, so I will be doing that a bit later. But that is the power of risk to reward. Okay, what we're gonna go ahead and jump and look at is one of the trades that I took. I think we're gonna look at this one. I think that was USD card, if my memory, yes, USD card. That's what I took on Friday, and 250 and 8 cents. So let's go ahead and jump and look at USD card. Yeah, so USD card, we could start from the weekly. 0.22, that was my lot size. I still have it on there. Just delete that, clear that off. Of course, overall we could see USD card has been bearish. Okay, you could see USD card has been dumping. One of the key factors I would tell you that USD card is definitely dumping is this low right here. Okay, so if you go on our line chart and we send the horizontal ray across, if price had to continue bullishly, they would have needed to respect that low right here. We could definitely see that price came into that low at one point right here, and then they wicked all the way above it. Okay, but guess what? They came down and they melted again. So that is actual confirmation that, hey, price wanted to respect that low and push higher, but guess what? They couldn't have done so. So this is my thought process while I'm looking at this before I actually took the trade. So price closed below, and of course, what did price do when it closed below? It created a weekly fair value gap. Okay, weekly fair value gap, nice and clean, very visible. So I went down to my 4 hour. Now bear in mind, this trade gave people ample opportunity to capitalize on, to take it. Ample opportunity. I'm not even gonna lie. I wasn't present for this move when price came into this weekly fair value gap. You could see price came into the weekly fair value gap and then they immediately started pushing to the downside, right? If I came in for this move, I probably would have entered somewhere right here, and my stops, of course, would have gone above here, because what price did, it created a intermediate term high, right? An intermediate term high, you have a high to the left, and then you have a high to the right, right? Price is respecting this high that it created right here. So where I got in, let's see, I believe I got in somewhere right here. I got in somewhere right here. I saw price push up, came down, push up a second time, or third time, you could say, and then I saw price come down below this low right here. I think on the 1 hour you could see a close. Yes, you could definitely see the close below this low right here. Okay, and then when price came back up into the zone, I just decided to, you know what, enter my stops above the high, the intermediate term high, doing what? Targeting where is the draw on liquidity? That is my next thought process. Where is the draw on liquidity? I love my 4-hour draws on liquidity, but as you could see, it's not as clean. So I went to my daily. I like my high time frame draw on liquidity. Went to my daily, look for my line chart, bam. So draw on liquidity just means if price is moving to the downside, where is price targeting? Where is price drawn to? So this was the area right here, the close of this daily low right here. And you could see price just absolutely melted. Sorry, you could see price just absolutely melted, and we got a nice 1:2 2.5 right here, right? And price is still melting. What could we have gotten? We could have gotten a nice 1:3.6, but coulda, shoulda, woulda. At the end of the day, you have a plan. The best thing to do is to stick to your plan, right? And that was my drawn liquidity, and that was essentially the trade. So overall, as you could see, good month. I'm still climbing my way out of drawdown. I've taken some of those same trades on my personal account. I will definitely be doing a video on withdrawing from the personal. I was trading with XNES, only moved from XNES over to IC markets because where the charts is concerned, of course, I think everybody know that brokers could manipulate the highs and the lows. That is something that they're able to do. But one thing that I noticed with XNS is that on the lower time frame, stuff like fair value gaps, stuff like liquidity hunts, things of that nature, it wasn't too clear on the charts, right? Meaning you go down on the low time frame, you're not going to see you might see a fair value gap on Oanda when you're doing your back testing on trading view, but when you go down to XNES, you're not seeing it, right? So these little minute things could lead you to missing out on trades. And of course, we all know that trading is something that is very challenging. I don't want to say difficult, it's challenging. So you want to limit the odds of you losing by any means possible. So this is why I move over to IC markets, and I believe IC markets is a lot more secure. Not saying that XNES is not secure, but I believe IC markets is a lot more secure. So that is essentially it for today's video. So just bear in mind that when you're looking at risk to reward, you should always be risking, you should always be gaining at least 2 times what you're risking. So at the end of the day, if you take one loss or if you take 2 losses, guess what? One trade. It just takes one trade for you to cover those 2 losses. One win to cover those 2 losses. And of course, the next win would put you up 2R. And if you were to lose another trade, then obviously you would still be up 1R, right? Depending on how much you're risking, if it's 1%, etc., etc. But that is it for today's video. I hope you're able to learn something from it. If you were able to learn something from it, of course, be sure to leave a like, be sure to subscribe, and tune in for the next video on the weekend. Ciao.